Hi, good morning. Thank you for the invitation to Cyberport, and big congratulations to Cindy and Peter on great success in the CIN's network. So, 2022 Q3, I will take the next 15-20 minutes to give you an overview about the activities and trends globally as well as regionally in Asia as well as China. And before I get into the numbers, last year, same time at the CVC Forum, I talked about the outlook as well for 2022. And back then, like many of you, we had great hope that the COVID restriction would have eased beginning of 2022 this year. And we have been having that hope, but then remain very cautiously optimistic. But actually what followed in 2022 from the beginning has been a series of, I would say, challenges and surprises. Service to say that it's actually is not easy to downplay all the incidents and their impact, not only on countries, but actually on businesses and individual level. So currently, you would have seen in the news on a daily basis about the pressure on inflation and interest rate hike, and also the impact on consumer confidence in spending. At the same time, a lot of the tensions, geopolitical tension that I did talk about last time, continue to intensify. And labor market also is one of the areas that I personally see a lot in our business. And I talking to clients locally as well as globally, there's been a really real challenge in attracting talents as well as bringing people back to work after almost 3 years of COVID experience. And last but not least, there are a couple of areas that is also interesting. I thought I'll also mention that. I mean, Hong Kong, China, we're still managing the COVID situation, but I think we're glad to see that Hong Kong finally are releasing the restrictions on traveling. Globally, when we look across, many of the countries eased their restrictions earlier, but then the recovery from COVID has not been even. Some countries are recovering better than the others, and that also create differences in terms of performance, but also potential, I would say, challenge when companies are operating globally. And last but not least is about the climate change and the energy transition. That's been a really hot topic, and I think we should be very glad to see that businesses and government and country finally fully aware of the risk and then the need to actually take actions. What comes after, though, we'd like to see more opportunity for entrepreneurs, but at the same time, during the transition, there will be challenges that we need to overcome, whether it's about job losses and also capacity building. So that sets the backdrop of the global trends and challenges. So now let's dive into the numbers. And you shouldn't be surprised to see that the numbers continue to trend down since the beginning of this year, since Q1. And in 2022 Q3, we have seen again a drop in VC funding globally to 87 billion, and across all regions we're seeing the decline, and also whether it is early stage or angel stage or late stage, they're all trending down. And compare with last year, though, what we are seeing, though, despite that trends going down, there are still mega deals being recorded in all the regions. And what that means also that there's slightly different kind of strategy being adopted by the investors. There's a lot more concentration for late stage. At the same time, there are obviously challenges when it comes to valuation. what we are also seeing, the fact that the volume and valuation or the actual deal flow has come down, there's actually a record level of dry powder in the market. That applies across our region. So they remain cautious, looking for a good investment, but nonetheless, that's actually a good sign that when the market does recover, there will be a lot of funds coming through. In terms of sectors, the sectors that actually are being most sort of preferred by investors that we have seen are companies that are slightly capital light, not as intensive. So the one in the middle, you can see that the big chunk is actually software company providing digital solutions, SaaS company, are attracting a majority of the deal flows. And we are also seeing companies that are in health and biotech, and I always talk about this because it's actually proven over the past almost 3 years now to be a really resilient sector. Locally in Hong Kong, obviously, we see specifically this is a strategic area, but globally, this is also an area that investors really are interested in. Also, I talked about the fact that globally, many of the countries have already eased their restrictions on COVID. So businesses that actually benefit during the COVID period, either it's about food delivery or some of the B2C businesses, actually seeing less interest when it comes to fundraising. So investors are actually slightly moving away from the B2C businesses and more to the B2B. So in terms of the global trend in Asia, we are seeing that the trend follow the global trend when it comes to fundraising. It is trending down. However, the trend, we must say, within Asia, we always say the most representative regions is actually, you got India and China. And actually, they have slightly different, I would say, trend seeing. I will show the China trend later on. But then even it's going down, we believe that actually they have quite resilient, especially in the India, Japan, and China markets. And we are seeing also within China, there's an uptick in VC investment, very different from the global trends. Sectors that are actually most exciting is here. So again, companies that are in software also continue to be preferred. But at the same time in Asia, there are companies that are in improving, addressing, for example, electric vehicles, and also hard tech in China that are actually attracting funding. And separately in the Southeast Asia, companies that are improving productivity in businesses, the enterprise solutions are also interesting. Energy sector right now is still a small portion at the very top bar, the purple one, but then we are seeing good growth and good potential. And also energy sector, because it would be a bit more slightly capital intensive, especially those are in the storage or battery business, they tend to attract bigger round of funding. So I thought it'd be interesting to share with you about the overall sort of up, down, or flat round, because I think there's so much discussion, and also entrepreneurs themselves, right? And even businesses have a hard time making projections and also determining the valuation. When we look at the actual deal flow, you can see that despite that there is a company that are perhaps having to adjust their valuation, the up round continue to represent a larger number and proportion of the deal flow, whether it's based on the number of rounds or the actual fund raised. So that is actually comforting in one sense that we're still seeing resilience in companies' valuation. Now, let's take a look at China. I did talk about the fact that China is very different from the rest of the global trends. They're actually trending upwards. So the VC in China actually going up is actually for Q3, it has increased by 30% to 13 billion. And that applies across seed, early stage, as well as late stage. So this is a really interesting trend. We like to see the fact that it's turning around in Q3. And especially in China, sectors that are very much aligned with the government policy directions are the ones that are most supported by investors. Many of these are, you would have heard about hard tech, semiconductor sectors, and climate technology, ESG-related sectors also favored. And so because of the policy that would support them, I think this is considered that probably in part help investors de-risk some of the potential uncertainties in the regulatory environment. And in fact, out of the top 10 global fundraising, 2 of them are actually from China. So in new material as well as in climate technology, so EV batteries. So I think it does support and also explain the investors' interest in these areas. So when we talk about this region in China and also later on in Hong Kong, in addition to VC, we always want to take a look at the public capital markets because it does give us an indication about the exit activities. And interestingly, we previously have, not in this form, but looking at the global IPO activities. And when you look at globally, the global funding on IPO has come down quite significantly. It's been a really quiet IPO market this year, also in Hong Kong. But interestingly, in China, 3 quarters up to this year, Q3, the fundraising amount already exceeded full year last year. So China actually has become the top IPO locations globally. And obviously, there are many of these deals are pretty sort of strategic sectors in China. But at the same time, it also means that there's still companies, quality companies that are ready for going public. At the same time, there are investors willing to support these IPOs. Sectors that are the one that raised the most amount of funding through IPO is TMT, industrials, healthcare, and life sciences. So that trend has been what we have been observing for the last few years, and that continues. Now, let's look at Hong Kong. Typically, Hong Kong's, we look at together with mainland with China, but then I purposely sort of extracted the Hong Kong number. Hong Kong number is more aligned with the global trends. So across all different stages of funding, they are trending down. But what I like to mention, though, is that it looks like Hong Kong has stabilized. We have seen a big drop earlier this year from Q1 to Q2, about 60% drop in venture capital investment. But in Q3, it's actually going a little bit higher than Q2. So we're hoping that trend continue, and then the Q4, we're seeing even better number. And I'm not too surprised the fact that there are so many targeted government policies and programs, such as the one from Cyberport, is actually driving a lot of the VC activities and helping the market and investors sort of get back into sort of taking a more risk and also willing to back some of the early stage companies. Okay, in Hong Kong, what we believe that have growing interest is in the B2B and also their clean energy sector. And also what I did mention here, obviously, is the Web3. One of the biggest deal that we have seen in Q3 is Animoca, so $110 million. So I think that also kind of set a great example for Hong Kong that we actually have a diverse range of companies in Hong Kong. Again, I talked about IPO in China and IPO in Hong Kong, and that trend, it is indeed very much following the global trends. IPO exit has an impact on VC activity. That's what I always say. But what I think is the fact that looking at the IPO pipeline on the exchange, companies that have submitted application but have not yet closed, the pipeline is still pretty healthy. And I do hope that with the ease of the COVID restrictions, investors are more willing to invest, and then and I think valuation is at the level where market is more comfortable. So we do believe that with that, and then the dry powder that is available, we should be looking at improvement in the coming quarters. So I want to just take a minute to update also that what's also going to be exciting for the Hong Kong capital market is the new 18C chapter. The consultation just came out, and what it really is trying to also give additional venue for companies that are mostly driven and focused on R&D activities. Either they have commercialized or they have not commercialized, would have lower financial requirement when it comes to going public in Hong Kong. And I have given you the summary. I won't go into the details, but essentially, what is being defined in this 18C as specialist technology could range from advanced materials, the next generation IT solutions, food tech, agriculture tech, new energy. Again, this is something that I've been mentioning a few times. Advanced hardware. So it could be anywhere from semiconductor to really nanotechnology, for example. So this is going to be exciting, I believe, for Hong Kong, for a mainland Chinese company, but also we could be attracting a lot of the company outside of this region. Right. So I want to also talk about that with all the global trend, what is interesting in Hong Kong? Why am I optimistic about Hong Kong and also in the coming quarter? Is that the two areas that specifically about the Greater Bay Area. I don't know among the audience you're from Hong Kong, but also there might be international audience listening to this. We've been talking about Greater Bay Area for a few years. And every time we talk about the fact that Hong Kong can really leverage and expand into a much bigger population and potential. But actually, there are specific policy now announced and more targeted. And I thought I'll just give you a quick overview, and I will also talk about what it really means for the entrepreneurs in Hong Kong. So first of all is the Northern Metropolis. The Northern Metropolis is interesting in a sense that is meant to create a big, a livable city at the same time with a very focus on driving INT. And they have particularly sort of in the plan, there are going to be 3 development circles. And Lau Fao Shan is one, and then you have Santian, and then you have the wetland conservations. So it's actually quite a interesting combination. Typically, we want to not just, in this case, not just to grow a city or a central business district. We actually want that to be a livable community with a full ecosystem. And a lot of the focus will be on collaboration between Hong Kong and Shenzhen because the Northern Metropolis is going to sit right next to Shenzhen. Next one, very quickly. I also want to touch upon Nansha. Nansha is going to be, it has been the fastest growing district in Guangzhou. And Nansha also has a very specific targeted startup support measures and policy, especially for Hong Kong. So if you're Hong Kong citizens and Macau citizens, you can enjoy income tax, individual income tax exemption. At the same time, there are a whole suite of policy to help Hong Kong entrepreneurs and startups to set up shop in Nansha. So there's also talent cultivation, though not only the startup, but also the youth development. So the plan is to really try to create a very holistic support ecosystem. So what does it really mean for Hong Kong or startups in Hong Kong or those who are interested in GBA? it is Hong Kong will actually be positioned as a springboard for commercialization and development. The key focus are 3 areas. Number 1, the collaboration between Hong Kong and the rest of GBA now very specifically is going to be about R&D, research and development. Second is about commercialization, translation. So market and research collaboration will be the key driver. And second is about talent. With that, next to such a big market is also about how can we tap into the talent pool across the border, but at the same time give opportunity for those across the border to come to Hong Kong. So there will be much more policy, and you have already seen that how we can actually attract more talent and also entrepreneurs to be developing the business in that GBA. Last but not least, I talk about that 3 circle. One of it is actually about sustainable city and also nature reserve ecological development. Sustainability and smart city development will be a very important opportunity for companies that are especially in climate tech, clean tech, or green tech. So with that very clear focus, I believe actually GBA now had a roadmap as to what it will become. And I thought this is really exciting. So last is about market outlook. So obviously it's very hard to predict what's going to happen. Obviously I always want to add with an optimism, and I think I do have all the reason why we can be very optimistic sitting in Hong Kong. Globally, it will continue to be, I would say, investor will continue to be quite conservative because different regions are facing different kinds of challenges, and this would take time for that to go back to normal. However, looking in China, we are happy to see that China VC investors are becoming very strategic and looking at areas where there will be less risk when it comes to changing regulation and certain uncertainties. So we believe that areas like climate tech, hard tech, and healthcare life sciences will be quite interesting in the coming quarters. And also, because of the continued sort of slowdown, except for China when it comes to IPO, we potentially could see an uptick in M&A activities when companies might be looking for different ways to exit. Asia, we believe that momentum will continue in fintech, health tech, SaaS company, and also company addressing business productivity and green tech. Again, Hong Kong, that's my message that I want to leave, is that I am a firm believer that Hong Kong is a very resilient city, and we are set to have a very sustained and also a rebound and recovery because of all the measures I talked about. And I think the conditions actually that we are in are best opportunity of all, despite all the challenges I talked about. So with that, I want to end my presentation, and thank you so much for listening to me.